In Nigeria, we did see a pullback yesterday. The NSE index down almost 2% on the back of the profit taking that we saw in the market. Of course, the market has also rallied strongly this year, but over the last week or so, we've seen a lot more profit taking activity, and of course, the likes of Dangote Cement pulling back the index in yesterday's trading session. We've also seen some profit taking in the fixed income market, and we'll talk a bit about that as we cross now to Stanbic IBTC, where Steve Osho, a fixed income currency trader, is standing by. Steve, it's great to have you on our show, and I want to get your thoughts, first of all, on the dynamics that we are seeing in the fixed income market these days. Some volatility, but the trend has been lower in the recent few weeks.
Yeah, correct. Wole, good morning. We've seen a lot of activities in the fixed income space for some time now, and this week actually not being an exception. We've seen a great rally from the last auction, which auctioned the 5, the 7 years, and the 10 years. And since that time, we've seen a slowdown in the secondary market, with the yield trading at 10.5 now on the 5 years and 10.6 on both 7 and 10 years. I think it's better explained because we've seen so much interest coming from both locals and offshore interest across the month. And over the period, we've seen quite a lot of demands going through the fixed income space. But right now, we've seen some slowdown as offshore investors actually a bit slow, have not come through in great demands on those security for some time now.
Okay, but you did say we are seeing interest from the offshore investors, but what I'm hearing is that interest has slowed down. In fact, to some extent, that's why we've seen some weakness in the Naira. The Naira currently trading at 158 Naira 50 kobo to the US dollar, so at a record low for the year, and to a large extent it's because of the decline we're seeing in the activities of foreign investors. How do you see the dynamics in terms of the foreign investor interest in our fixed income market going forward?
Well, the slowdown we've seen actually is not a surprise to us because, like I said earlier, if you've seen where we're coming from, the offshore investors actually been riding this yield from 16%, which we saw last year, till when it got to about 13% at the close of business last year. Right. And we opened around 12% beginning of this year, up till this present level, trading around 10.5. And the reason why we're actually seeing a slowdown is because we've seen some kind of leverage hedge funds trying to take profit at this present level. And you won't really blame anybody if you're reading the curve from when it was trading the high of 13 to 16%, and you're seeing the yield at 10.5 to 10.3. Well, I don't think the reason is actually far-fetched.
Okay, and but let's talk about the risks, though. The risk of foreign investors moving the money out. I know you mentioned they've been taking profit recently, but what I'm hearing is that money is still staying within the financial system. We're seeing very little outflows from the foreign investors. What do you think are the key risks that investors should be pinning their eyes on that could trigger an outflow of funds from foreign investors?
I think for me, we have actually limited endogenous factor that could cause that movement. If you look at the Nigerian space generally, inflation has come down from the high of 12% to around 9%, and we actually foresee a single digit for some time to actually retain. The oil price is still trading above 100%, with the benchmark still given at 79. I think the risks that will actually run will actually be more or less like the emerging market risk. Because the way these offshore players actually look at this market is the basket is actually categorized in just one portfolio. Right. So if there's actually crisis in other emerging markets, the possibility is there that actually might cascade to our market. And as long as there's the world global peace and there's still risk on in the global space, I think the interest will still come into Nigerian space. Okay,
so the risk is low at this point. But your thoughts on when it's likely to pick up significantly? We know that the inclusion in Nigeria into the Barclays index is something that should happen over the next few weeks. Your thoughts on the impact that is likely to have on the interest levels in Nigeria fixed income? Because you have to balance things out with where the yields are right now.
Well, from what we have right now, we've seen a slowdown, like we said before, but it doesn't mean that we're not going to see some kind of demand coming through that space. Like you said, the Barclays index is due to come this month. And with the announcement, we expect to see some other refunds, real money players actually pursuing some of the government securities to put in that portfolio. And don't forget that even in the Barclays index, there will always still be some actually demand coming from the real money players that will actually put into that index in terms of weighting. So I think everything being equal, we still expect to see some interest coming from both offshores and local investors. And if you look at the market liquidity over a period of time, we've seen quite a lot of liquidity in the system. By and large, this liquidity will actually look for something to actually put this cash in. And from what we're hearing, the second quarter calendar will actually might be a reduction in terms of supplies, in terms of government security. So with inflation at 9%, single digit, expected for the second quarter and probably for some time, and possible reductions in amount of supply in the second quarter. And with the interest coming from offshores and even the local investors, liquidity in the systems, Barclay Index, JPI Index, global economic risk on, I think there's still room for investment in Nigeria.
Okay, so let's look at the agenda for this month. Of course, we'll have some treasury bill auctions as usual, and of course a bond auction. Your thoughts about where yields are likely to close at those auctions if we look, I mean, based on the trend we've seen over the last few months?
Well, for the bills auction that's going to happen probably next week, I don't think there's going to be any major difference from what we've seen in the secondary market. We've seen between the 91 180 days trading around the 10% yield, 10.5% yield, and the 1 year trading between 10.3% yield. So I think we're still going to see interest around that particular maturity, and we're still going to see yield, hovering within those space.
All right, of course. And let's talk a bit about the Monetary Policy Committee meeting that we'll hold in another few weeks as well, and how they are likely to react to, of course, the drop in inflation, the budget that has now been passed. What are your broad expectations as to how the MPC is likely to react? Bearing in mind that last month, when we had the MPC in January, there was a view that they were going to keep rates on hold, and of course it played out that way.
Well, if you notice from trend for some time now, there's actually been voting in favor of whether there's actually been a reduction. There's not been any consultation for an increase in MPR.
Sure.
So we still think that that's going to continue without all the economic parameters still remain the same. Exchange rate, though, has actually weakened a bit, but I think it's still within the threshold that CBN want to keep it. And inflation within the single digits, a lot of liquidity in the system, and everything's still working for them. Physical discipline from the government is expected. I think the tightening will actually slow down at this point, and actually might see some kind of relaxations in terms of the rate going forward.